So welcome everyone. I want to welcome you once again to BYOB Market Talks. Now, one thing that we have been definitely been doing is you guys have been doing phenomenal. But what I definitely want to do is I want to make sure this evening that we take this a step back and we kind of talk about some of the basics. But before we do so, for those of you all who have just joined us, if you're joining us for the first time, you've never ever joined us before, let me get a 111 in the chat. If this is your first time with us for Market Talks, BYOB Market Talks? Let me get a 111 in the chat if this is your first time. And welcome, Canada. Welcome. Good evening. Good evening. So awesome. Welcome. This is Market Talks. And what we do with Market Talks is this is an actual training call. So in the evenings, what we like to do is train. It's about financially educating and empowering you. Now, and also welcome. And then also, let me get a 222 in the chat. Let me get a 222 in the chat if you are still learning how to cash out. So welcome back. So now, once again, this is BYOB Market Talks. So as promised, I promise you all that we were definitely going to take a step back and we were going to help you understand how to navigate the market, how to look at the market. But we needed to take a step back and kind of talk about some of the basics, right? Because some of the questions that we had were some of the basic questions. And so I want to welcome every one of you all that has begun your trading journey. Welcome each and every last one of you all. So that's not what's supposed to happen. Let's go back here. Let me see, why is it doing this? Give me 1 second. Let me stop my share and see what is going on here. Give me 1 second. Okay, so let's try this again. I'm gonna try this again. All right, here we go. So first things first. So now for those of you all who are joining us, those of you all who have not gotten started, those of you all who might have actually gotten started, but might not have actually got into the academy. One of the things that I need you all to do and understand is the first thing that you actually want to do is you actually want to begin with making sure you go through the IM.Center. Okay, now when you go through IM.Center, one of the things that you definitely want to do is there is a playlist. Okay, on a playlist on BYOB Challenge on the YouTube channel, there is a playlist, and on this playlist it definitely says getting started. Okay, I thought we cut the doodler off, but obviously we didn't. So if you can go ahead and erase that, please. Thought we cut those settings off. Now, what you want to make sure that you do is go to that YouTube channel, Getting Started. And when you go to Getting Started, it's going to walk you through how to go through the IM.Center. You always want to begin at IM.Center. So you always want to begin there. So now, then what you want to do is you want to go to the playlist BYOB Cash Out. So you start with IM.Center. It's going to help you understand how you log in. It's going to help you because the first time you got a special password and everything else. So You also, and you're so very welcome. You're so welcome, Flora. And then you want to go through BYOB cash out playlist. It's going to help you understand how to trade the cash outs. Then there's a second video that's going to help you understand time frame confluence. And then there's a playlist that is actually going to help you understand what you need to do to get started. Okay, going to help you understand that. Now, that is how you get started. Okay, so if you have not done that, go back and do that. Can my doula please erase that? Thank you. Now, as you get started, I know why we're here. We're here because we said 1 million families financially educated and empowered. You're here because the blinders were removed. You're here because you want the money. You want the wealth. You want that. But if you focus on that, you're not going to focus on risk management. If you focus on the bottom line and you focus on that dollar amount, you're not going to focus on proper risk management. And where we need you to be, where we need you understanding is that we want you focused on risk management, because proper risk management is how you're going to grow your account. So the money is going to come. So yes, it's easy for me to say, forget the money, right? Forget the money is going to come. But what you're going to do is focus on a skill set. It's going to grow. Now, keep your emotions in check. What does that mean? What does it mean when I say keep your emotions in check? Now, you have to remember, if you've been on a call with us, if you've seen any call, we talk, you're going to learn that there are fundamentals and there is technical and there's fundamentals. So you're going to understand that the market, the people who move the market, the banks who move the market, they can be a little emotional. Right now, we've been talking, one of the things we've been talking about is oil, right? Because, right, the coronavirus that's out there right now. So understanding that this virus is out there, understanding that it has the markets, it's impacting the market. So you can mark up a chart, you can do this, but that's going to have some impact. So why is oil selling? Why is it at a floor? Why is it where it's at? It's because of the virus and the impact that it's having. So when you understand, you cannot trade emotional. You have to check your emotions at the door. So when we tell you cut the news off, when we tell you let's not be emotional, you have to shift that mindset. When we say cut on Bloomberg, because you want to understand financial matters, financial news, financial, everything in your life right now should be financial, because this is where now God first, let me never shift from that. But I want you to understand that where you want to be is you want to keep your emotions in check. Nothing should be able to sway you. Nothing should be able to move you, because just as you see, like right now, the State of the Union is on. Right now, do you not think that the market is going to react? If the president sends a tweet, the market reacts. We've been on a call and we've seen where the market pauses because there's news. Come Friday is NFP. So it will be a great trading day after the announcement. But before the announcement, we don't do calls on Friday, and before that announcement, the market will be at a pause waiting for those announcements. So we have to learn to ride the wave of the market. We ride the wave of what's going on. So you keep your emotions in check. You cannot look at a trade. There's no such thing as wish, pray, hope that it goes in a direction that you want it to go in. It's no such thing as that. You cannot root a trade into your direction. You want to practice proper risk management. You will not hit every trade, and nothing is 100%. So you do not want to over leverage your account. You do not want to have your account to where your lot sizes are out of balance. You want to make sure you understand the balance of your account. You want to make sure you understand how to properly trade your account, so that if you do hit your stop loss, guess what that means? That means stop the loss. It means stop the loss, so that it does not impact your account, right? That's what you want to also understand. And then you want to learn the skill set and stay focused on that. So BYOB Challenge, the YouTube channel. You know how many videos are out there for you? You know how many videos are placed out there for you? That's for your knowledge, for your skill set. Why is it that, yes, we start you on the 15-minute chart, understand the strategy, understand, because you have to build up. Some of you guys, yes, you are swing traders. You want to learn more, you want to do more, but you also want to impact it. We want to teach it from that foundation to where everybody's, because you want to understand what type of trader you are. And then demo. If it's your first time trading a certain, if it's your first time trading a certain a currency pair, go to your demo account. When you begin trading, go to your demo account. I understand you want the money, go to your demo account. Everything you do needs to be in your demo account. I promise you, if proper risk management, if you don't want to practice it, I'd rather you just ask me for my Cash App. I will send it to you. Okay, I will give you my Cash App. Don't donate it to the market. Give it to me. I will take it. Right? Ha ha, funny, right? But what I'm trying to get at is you want to practice proper risk management. So use your demo account, use proper leverage. That's where you want to be. Now, what we do is we trade with you and not for you, okay? You are the signal, right? We start these calls. I am a master trader. I am the signal. All my trades end in profit, right? That's how we start these calls. I am a master trader. I am the signal. All my trades end in profit. And so in doing so, we mark up the charts. You notice I'm not dropping it. We can do that. You get the US 30 calls in there, right? You get those, but there's a benefit to being on those 5 a.m. and those 9 a.m. calls. It's a benefit to that. So I understand that some of you, yes, you have jobs, or sometimes you can't always be there, but that's the purpose of you being a signal. That's the purpose of you being able to mark up the charts. That's the purpose of you being able to understand. Because when you do that, it's the purpose of us saying, hey, your support and resistance lines are your lifeline. And that's where when you understand it, that's why we spend so much time there. That's why we're not done there. We'll never be done there, because it's important for you to understand that. Because yes, we're going to talk about BYOB cash out. We're going to walk through that on this call this evening. We're going to make sure you understand that. But you also want to understand what your buy stop is, what your sell stop is, what your buy limit is, what your sell limit is, because you can do that for yourself. You can trade that for yourself. You could set these orders for yourself. You don't have to sit and watch it, because guess what? GBP rolls up. I know a few of you all caught it today, but GBP, oh my goodness, that ride up is no reason anybody should have missed it. So let's make sure we understand what these orders are so you know how to put those in place. Because no, you didn't have to sit and watch your phone. You didn't have to sit and watch your computer. You didn't have to sit and watch it, those things to be in place. You could have taken that trade. You know, you could have definitely taken those trades or put those orders in place when you understand what the market is doing. You understand where your support and resistance lines are, and you can put these orders in place. And at no point should you ever wonder, can I still get in a trade? At no point should you ever wonder, will I be able to take a trade? Just like the gold trade that I was still in today, right? Just like that gold trade. So you want to always make sure that we're definitely doing that. So okay. Oh, okay. So you've watched so many videos and you still don't get support. Oh, okay. Well, hey, you're in the right place. You're definitely in the right place. So now, what is a buy stop? What is a buy stop? So when I'm talking about a buy stop, let's talk about these. So what is a buy stop? My buy stop means that my order is placed above the price. And I'm going to show you this on the chart too. But a buy stop means that my order is placed above price and I have every expectation that the price is going to keep going up. That's what a buy stop is, okay? That's what it is. Now, what is a sell stop? A sell stop means that the order is placed below price and I have every anticipation and every expectation that the price is going to keep going down, okay? That's what I'm expecting. The price is going to keep going down. Now, what is a buy limit? That means that the order is placed below price. So when we have those calls, when we're on the call and we say, oh, it's going to rise a little bit more. This one is going to sell a little bit more. It's going to sell, but we have every anticipation that it might go down to this one or this one, but it's going to turn around and it's going to go up for a buy. After that, it's gearing up, but it still has to fall a little bit. That's when you would place a buy limit. And then a sell limit means when we're looking at it and we say, oh, but it's going to rise just a little bit more. And then I'm going to place that sell limit in place. That's what that is. So let's take a look at it. Okay. This is my chart. This is my chart. And if you have a question while I'm going through this, drop it in the chat. But I'm going to ask you not to do it as a private message because I'm on a PowerPoint. So I have two different things open. So I really need you to just drop it in the chat because I can see your questions, okay? But a private message is not, I'm not going to be able to see it because it's going to go where the PowerPoint is. So now, buy stop. What I'm looking at, okay? What I'm looking at is what you see is, you see we have a trade. Now, when we mark our support and resistance lines, you see that is what this is. Okay, that is what this is. We definitely have a support and resistance line. Okay, so I have my support line, I have my resistance line. Now, you see this is my trade, okay? This is my trade. You see it's testing a line, it's testing a line, it's testing a line, it's testing a line. It might, I have every anticipation, every expectation that it's going to break through. It's testing, it's testing, it's testing, right? And then in our case, because we cashed out, we got the blue line that crossed over the red and a downward momentum, right? We got our red candle with a flat top, and we waiting on that piece or the flip. So we have every we're talking about a buy. I'm sorry, I just gave you a sell. So let me back up a minute. Let me back up. I got too excited. I was talking about the limit. So, but here we go. We're talking about a buy. So I'm expecting it. So in our case, when I said let me back up, we would have been looking at it to curve up. So everything would have been curving up. Everything would have been going up in an upward momentum, right? So now what we're looking for is we have every anticipation for it to break through that resistance line. We're looking for it to break through that line. And when we're looking for it to break through that line, we're looking for it to cross through that line, but you notice that it's a little bit above it, right? We notice that it's a little bit above it. So we're expecting it to break through. But what happens if it turns around and it comes back down? So we don't want to enter the trade until it breaks through. So we actually experienced that this morning. So what we would do is enter a buy stop, okay? We would enter a buy stop. We could have entered a stop order this morning, but what we would want to do is just enter a buy stop because we do not want to be in the trade until we need to be in the trade, okay? We don't want to be in a trade down here. We want to make sure it breaks through the resistance, the support and resistance line. It doesn't matter. They're the same line, resistance, support, depends on which way the market's going, okay? Just to make that clear. Now, a sell stop, same exact thing, right? Same exact thing. You notice that it's coming through, right? Now you got those same support and resistance lines, right? Same lines. So it's testing the line, it's testing the line. I have every expectation that is going to come through here, okay? Every expectation that is going to come through here. So what indicators are we looking for it to break through the resistance? We're gonna go through the BYOB cash out because even with the BYOB cash out, it's still gonna look through there. So we'll go through there when we finish this. So trust me, I got you. So now, when it breaks through here, what you're looking for is you're still looking for it to break through. Like when you're looking for it to break through this. So I would enter my sell stop below it. So if any of you guys on the call this morning, do you remember? And I want to give you a visual. So if you were on the call this morning and I was saying, you know, hey, we're looking for it to break through. Let's kind of wait for it to break through and then we can take the trade, right? And because we kind of highlighted that resistance point and we're like, let's wait for it to break through. that's what I'm talking about. So that would be a perfect example of what a sell stop is. So that's a perfect example for those of you all who are on the call this morning. Now, buy and sell limit. So before I go here, before I move on to this, let me get a 555 in the chat if you with me on that. Just let me get a 555 in the chat. 555 in the chat. Awesome, awesome, awesome. Okay. Now, what is a buy limit and a sell limit? So what you're looking at right now is you're actually looking at a range. Okay, you're looking at a range. So maybe about 2 weeks ago, it might have been about 2 weeks maybe, we looked at how the market moves. So it's either trending or ranging, right? So at the bottom or the top of every trend, most of the time, you're looking at is trending or ranging. So the market has to reverse, it has to turn around. So how does it turn around? Or it's trending or ranging, right? So, and a lot of scalpers will do ranges. If you're not a scalper, you pretty much won't be trading in a range. So what you're looking for, or what you basically, if I'm in this range, well, it depends on the size of the range and the time frame. But most of the time you'll see people scalping ranges. Other than that, the trend is your friend, right? So if you're looking at this range, now you see it came into the range and now it's bouncing in between the range. It's bouncing in between the range. So, and like I said, just depends on, like, if this is higher time frame, the range would be wider. If this was GBP, you know, you can grab some nice pips in there, right? So, because we saw some GBP that had a nice range a while back, right? When we were trading those. So, now, when we were looking, now let's look at this range. So when you see, I got my resistance line and I have my support line. So before, when we were looking at the stops, right, it needed to come out and hit that stop. It needed to come out and hit the stop because it was going to keep going. So it needed to come out and hit the stop because it was going to keep going. Well, in this case, we don't think it's gonna come out. It's gonna stay in the range, right? It's not gonna come out. So what you're looking for is a limit order. So a limit, why do they name this stuff this? Who knows? But try not to associate the name with it. Just kind of remember that limit means it's like it's limiting this, it's limited itself. You needed to make a U-turn. I don't know what word association, because that's how I remember stuff. It's like some sort of word association. But just know that it needs to turn around. It has to turn around. So know that it's gonna come up, right? It needs to move up. And when it hits that resistance point, when it hits that point, it's actually going to turn around and come back down. So a stop means that until, like a stop, kind of think about the stop like a stop sign, right? A stop is like a stop sign. It won't be until you get to that stop sign or something outside of it when you actually activate your order. See, word association. So it's like your stop sign outside of your support and resistance that activates that order. But it is here where you actually get this sell limit where you are actually you'll actually get that, you'll actually get this where it's turned around. So you actually get this where it's turned around. So where it will actually kind of turn around right here. So this is what, this mouse keep freezing up on me. I'm sorry, guys. So this actually turns around right here. Now, this sell limit. So the limit means it has to turn around. So I'm looking for it to hit the resistance point, and then it will actually turn around and come back down. And then the buy limit, it will actually hit it, and then it will turn around and come back up. So that's the difference of the limit orders. So a stop means it really needs to come out, and then the limit means it's gonna hit it and then it'll come back around. So that's the difference. That's the difference of what that means. So Did that clarify it? Do I have any questions on that? Any questions on the difference of the limit orders and the stop orders? Okay, awesome. No, it won't buy or sell at the line. It'll do it when you get past it. So yeah, so now a stop loss, okay? Stop loss. Now I'm not gonna go into too much detail on this one because the way a lot of, which one do I use more often, stops or limits? It depends on the way the trade is set up. It's really all gonna depend on the market. So it really depends on the way the trade is set up. So now I'm not gonna stop loss. I'm gonna stress the importance of one. So I'm not gonna go into much detail on where to put it on here. And because of that, I'm not doing it because of that, because where does ours go? Ours goes above or below the PSAR, which I'm gonna get into the BYOB cash out in just a minute. Ours goes above or below the PSAR, right? Above or below the PSAR. Now your risk management. Typically, our stop loss is what, about 10 pips based on the time frame you're trading on. So if it's the 15-minute chart, unless we're trading GBP, so 10 to 15 pips, unless you're trading GBP. GBP, a lot of liquidity and volatility in the market, a lot of liquidity. So GBP, but you get more pips. So the risk to reward is there. So you want to understand that now, if you want to cushion it and give yourself more, then you can, okay? Understand that you can, but once again, that's where that is your personal decision. That's yours. But ours is above or below the PSAR. So we're not just randomly putting it here and using those measuring tools. Now you can use the measuring tools that the is provided in there, but you want to make sure it's above or below that stop loss. And why is a stop loss so important? The same way, like, let's see, if GBP can move one direction, 2, 3, 4, I mean, it can move 200 or 300 pips, right? It can definitely move 200 or 300 pips. So hold on, because I hear music, so that means somebody's not muted. So what I'm gonna do, hold on. Okay, so everybody's muted now, and nobody can unmute themselves. There we go. All right, so now what GBP can do is GBP can go like 200 pips in the wrong direction. And I won't say the wrong direction, in a trend. It can go 200 pips in a trend. It can go 200 pips this way. 100, you know, you can go to, so this 15, 20 pips stop loss, you want it because you don't want your trade. Let's say if this, you don't want your trade going, you don't want your trade going 200 pips in a different direction. That's really not what we're looking for, and that's not what we want to happen. Okay, so this is very important. Now this one actually makes sense, right? We talk about limit, but you know, stop, all that stuff. Like, why is it not go, right? Why is it not a buy go and a sell go, right? Why is it a stop? So, but this one makes sense. Stop loss, right? Stop the loss. Like, this one makes a lot of sense. So out of everything, this one makes sense. So now we want to make sure, you know, what is take profit. So you have a profit target. So 10 pips, okay? 10 pips. You have a profit target. You want to make sure that you are hitting that target. You want to make sure that you set a take profit. You set a stop loss. You do not just let your trades run wild. Do not have a runaway trade where you're just sitting there watching it. Because what if the phone rings? What if you walk away? What if something happens? You want to make sure, you know, you want to make sure that you have those parameters set in place. So when you hit your take profit, guess what? It is going to take you out of the market, but it takes you out in profit. When you hit your stop loss, it is going to take you out of the market, but guess what? It is going to take you out in the loss. But your loss, you're using proper risk management. So yes, you might have lost that trade, but at the same time, using proper risk management, your wins will outweigh the losses, because we're going to analyze our trades properly. And sometimes we just lose some, and it's okay, right? I don't even like losing trades, right? We hit a stop loss. I think we did today, but I think we're doing pretty good, because I think it's like what, every 2 to 3 weeks. I think this might be the second one we hit this entire year. So I think we're doing pretty good. Even I still didn't want to hit it. I didn't like it. So, but a pip, what is a pip? So a pip is a percentage in point, okay? A pip is a percentage in point. Now, well, before, I gotta pause, because I gotta pause. Any questions or comments? Any questions or comments? I want to make sure you're with me. I saw some questions in the chat. Ah, thank you. So, and I'm gonna get to the BYOB cash out. So I'm definitely gonna get to the BYOB cash out. Limit orders, I like to know, this stochastic is totally different. Don't mix those up. And so BYOB rocks. Yes, thank you so much. I love it. Love y'all for that. So definitely. Do I watch my trades? It depends on how I'm trading. I might just let it run. You know, I trust my analysis. So when I sit it down, I might just let it run. So if I'm scalping, then I'm in and out. If I do a longer trade, I just sit it down and just let it run. So I know the emotions that you guys go through in the beginning. I used to be there. So, and that's why I'm saying you cannot be emotional. That's why that's on that first slide about not being emotional, because you can get so emotional, you'll just like, what is it doing? Is this a pullback? Oh my God, I'll close the trade. You know, don't do that. Let it ride. That's why that stop loss and that take profit is so important. You know, you let it ride. You know, you ride the wave. Trust your analysis. You know, you cannot have emotions in it. And as long as you actually analyze your trade and you understand what you're doing, that's why we trade with you and not for you. You know, that's the importance of the trading with you and not for you. That's why we don't, you know, of course we say, hey, look, this is gold. Hey, this is US 30. Hey, you know, we give you some of those types of things. But at the end of the day, we're not, you know, hey, look, this is a GBP, take this, you know, we're on a cause and different things, but we analyze stuff and we're showing you, we're walking you through how to cash out, because you got to know how to do it. We're not just sitting here throwing signals out. If we never want an environment where, you know, if we're talking about financially educating and empowering 1 million families, we never want an environment where you are just sitting back and you're only putting in what we give you, because the minute it hits stop loss, the minute it's not a trade, then you don't know what happened. You have no idea why it didn't work, right? So we're gonna go to the BYOB cash out in just a minute, I promise. So, but it's also, but yes, 10 to 15 pips stop loss, but I'm gonna walk you through that in just a minute. I promise. So, but we want you to be the signal. That's the point I'm trying to make. So a pip is a percentage in point. So most currencies, it's the 4th decimal point behind JPY other than JPY. So if you look at this, these are the numbers. So get your phone, look at your MetaTrader 4. Make sure it's on advanced, okay? Make sure it's on advanced. Make sure it's on advanced. Do not have it on simple. Make sure it's on advanced. If I pull mine up right now, okay, and I go to my quotes, so you got 2 numbers that's highlighted, okay? Look at your phone, go to advanced. You got 2 numbers that's highlighted on your quotes, okay? Now, if you got an Android, I'm sorry, I don't know how to tell you to get there. If you have an iPhone, it's not as simple as an iPhone. If you got an iPhone, there's 2 buttons at the top. It says simple and advanced. You could just click the advanced button. So now when you click the advanced button, you see those two numbers that's highlighted, that's your pip, and they highlight the other one. Guess what? Because most people don't just go for less than 10 pips. So they click they highlight the two that you're typically looking for. That number that's little, that little bitty number, that's the broker spread. That's the pipette. So that's the pipette, that's that broker spread. So that'll help you kind of know what we're talking about right here when I'm telling you that if I go from 1.1112 to 1.1113, that's a 1 pip gain. And then when I'm looking at the JPY pairs, this exact same thing, where it's a 0.93 and a 0.94, that's only a 1 pip gain. But when I'm looking at my phone, just look at a JPY pair. Look at the difference of a traditional Forex pair, or just look at a JPY pair, and you'll see those numbers highlighted. Those numbers are larger, right? Those numbers are larger, and they have two of them highlighted because we mostly go to 10 pips. So it'll help you understand where you're adding and subtracting when you're trying to count your pips. Okay? So, see, somebody, you didn't know that. Now, your lot size, okay? Your lot size. So now look at your lot sizes. So this will help you understand as you're building your account. The pip movement is not your money. The pip movement is not your money. You have to, your lot size that you equate, that you attach to your money is your money. So this is where you want to understand, this is where your money comes in. So this 0.01, is 1.0. Now let me help you understand something with your brokers, because yes, we do a lot of US 30 trades. Okay, this 0.01, now some brokers do a 0.01 and some brokers do a 1.0. Do not get hung up on that. If that tells me you're not in your demo account. That's what that tells me. That tells me you haven't tried it in your demo account, because you will understand that that's not a micro lot. That's US 30 moves in points and not pips. So understand that that is totally different. That is not 10 cents a pip, right? US 30 is not moving like that. So what some brokers do is use a 0.01. So it's easy because they're talking about broker spread. But if you notice, US 30 moves in points, and the points are before the decimal. So technically, when you got a broker that's using a 1.0, that's correct because it's points. But yes, some brokers do a 0.01, it just to keep the same flow of what you've been doing. So that broker is correct. You're not trading a standard lot up here. But this chart, screenshot it. Do whatever you gotta do. Keep it on you. Make sure you understand, right, what this is. Now, this is just, of course, the standard without your broker spreads, okay? I understand that. But this is just to kind of help you understand how you correlate those the spreads, and this helps you understand how much money you're going to make, okay? That's what that's gonna do. Now you want to open a demo account. You definitely want to make sure you open a demo account. This is just an example of one broker. Depending on the broker you use, my recommendation is do not use the demo account that comes with MetaTrader 4. Just my recommendation. This is CoinX. They have other ones. CoinX, you have to go to their site, open an account. Crypto Rocket, for example, you have to go to, you cannot create a demo account on their site. You have to go into MetaTrader 4. And in MetaTrader 4, when you go to open it, you have to do it there. So it just depends on the broker. So, but my recommendation, a point that's here, and I'm gonna kind of skim through this because, you know, I don't want to get caught up on one broker, but I'm gonna kind of skim through this because I want to show you how to make sure we get to the cash out. But you guys got some questions on that, and there's some things that I kind of want to show you with that. Now, but just make sure, I mean, whatever broker you use, it's gonna walk you through it. Open the account, right? Open the account, go to your settings. The settings are right here, right? Click open the account. So you definitely wanna make sure you open those accounts. And you wanna, so CoinX, you have some brokers, the point is some brokers, you have to open it there. Other brokers, you have to go in there, whatever broker, you get your demo account with that broker on MetaTrader 4, but just don't use MetaTrader 4's demo broker because you want to demo with the broker you're going to use. They all move different. So you test drive the car you're going to buy. You don't test drive one car and go buy a different one. So don't expect to go test drive MetaTrader 4's broker, go buy a different one and expect your trades to work out the way you think they're going to work out, right? So just keep that in mind. Now, here we go on the app, I just want you to see this. So this is when you're opening this. So these are those numbers I was just showing you if you didn't grab your phone, right? These are those numbers I was just showing you. So I just kind of want to show you when you click your currency, right? You click your currency, market execution is what we're doing, market execution, okay? This is most of our trades have been market execution. Your other orders are right here, okay? Most of our trades have been market execution. Now, you definitely want to put in your stop loss and your take profit. Let me give you a hint. Market execution, go back and modify. Market execution, then go back and modify. Because remember, we talked about your pip reaction time, okay? We talked about your pip reaction time. Go to the iPhone, see how much simpler it is. You see how you didn't see that? I'm gonna throw a little shade real quick. You see how you didn't see that on there, okay? But yeah, you see I trade Apple, right? So I'm gonna throw a little shade. So right here, you got simple and advanced. So this is what simple looks like. You see how all of this stuff is not on here exactly, right? iPhone, team iPhone. You see how this stuff is not on here? You do not want your screen to look like this. What is the spreads, right? What are your spreads? You want to make sure that you actually understand. No, okay, no shade, no shade. So you want to make sure that you understand what it is that you're looking at. Like what are my spreads? So this is what it looks like on simple. So when you go back to advanced, when I actually have it on advanced, see, you want to know the spread. What is the broker spread? And so you want to make sure you have that there. So, and that's too far, wrong way. So you want to make sure that you have that information there. So, but this is a screen that opens. Of course, when you click that, you want to go to trade. You want to enter it. See, I'm sorry. I'm a little more shade. I'm sorry. That actually iPhones actually say stop loss. They actually say take profit, right? Sell by market, buy by market. It eliminates all the guesswork. This is where you enter, right? This is actually where I enter my lot size. You want to make sure you understand that. So you want to enter your lot size. So make sure you do that. So, but I'm telling you, enter that, sell by market, buy by market. Make sure that you do that, okay? Make sure that you do that. And then when you come back out of that, then go back in, right? When you go back in, I don't think it's on here on these slides, but there's a modify button. Modify it and then go back in and put your stop loss and your take profit. Remember, you have something called a pip reaction time. A pip reaction time, okay? Now, when you begin trading, well, that's a live account. You definitely want to go back in and create a live account. You're going to do your MetaTrader 4, right? You're going to select your leverage and your currency. Now, how do I get my money there? Okay. You got some people back. You say, if it's that simple, why do iPhone people need help? I don't know. So, so you go, of course, you can come here and do this through Coinbase. I will tell you one of the simplest ways that I found is through Cash App. So I'm not going to walk you through that one. But one thing that you do definitely want, even when you use Cash App, I'm going to tell you. Now, there are different ways you can do it, but the cheapest, most inexpensive way that I found is doing it through Cash App. Now, of course, you're still going to need your wallet, but you need to enable Bitcoin deposits and withdrawals, and that can take up to 24 hours. So, but you still have to transfer that wallet. You definitely have to transfer it. So your deposits and withdrawals. So from your trade account, from that account, you're going to grab that wallet, and I mean, it's literally like transferring money, but you just have to use your Bitcoin wallet address. It's very, very simple. It's easy. So from Cash App, I mean, you literally withdraw. You go in your Cash App and you click withdraw, and then you go to your broker and you click deposit and you paste, and you do it on your phone because you want to paste that address in there. And then from your broker, you want to withdraw, and then you come back to Cash App. And I mean, it's just that simple, right? It's that simple. So this is what I just showed you on the phone. Now, this is what I wanted to get at. Now, you look at this, okay? You look at this. These are older screenshots, but that's okay because they're going to give you the date. They're going to give you the amount. They're going to give you the spread. This is what your account is going to look like. But you notice, what do I want you to focus on, right? This is all blue. It's all blue, right? You want to focus on the skill set. What I tell you, the money's going to come, right? It's all blue. It's all blue. So the money's going to come. It's all blue, right? You getting pips. We're getting pips. It's all blue. Now, as you go through that, when you begin understanding and you're understanding the skill set, well, then it's going to happen, right? You're going to understand that you start increasing your lot size, you start growing your account, and then for the same trade, for the same spreads, for the same pips, then you start increasing your trade account, and it just starts growing, and then you start generating wealth, okay? Because now you focus on the skill set, and because you got the skill set, if you cannot sit your phone down at $2 and $5 and you spazzing out at $2 and $5, imagine how you're gonna be when you're trying to make a trade and walk away with $700 or more than that. You know, you have to get your emotions in check. It's just that important, okay? So I really, really need you guys to get your emotions in check. So what I'm gonna do is I'm going to pull my screen together because we got a few more minutes, and I promised you guys we're gonna go through the BYOB cash out, and I wanna show you this pip reaction time real quick. But as I'm getting that share together, do we have any questions? Any questions or comments? Drop it in the chat if we do, please. Oh, I'm glad it has helped you. I'm so glad. That is what we're here for. Yes, the growth compounding chart is in the BYOB Cash Out Facebook group under files. It's in there under files. Oh, you're so welcome, and I'm so glad. I'm so glad. So, oh, good, good, good. I'm so happy to hear all of that. You guys are so welcome. So let's talk about this real quick. So understand this. So looking at, so I have this already on this chart. So looking at one line, right? This was an entry, okay? This was an entry, and this was a take profit, okay? Or this was an entry, and I moved it. Goodness, why did I do that? So I know I had it marked up. So we're just gonna, because for the sake of time, I know it was like right here. So I know this is where the trade was. I had it marked up. And look at me adding more arrows. I moved everything. No, this is one, I marked it up earlier. So you see how it's way over here now. But this was earlier. So what you're looking at is this is where the trade was. This is where, when you looked at the MetaTrader 4, this is where the trade actually activated. So this was a 9 pip. This should have been a 9 pip. Yep. Okay. So that's a 9 pip reaction time. Okay. I don't need 2 arrows. This is a 9 pip reaction time. Okay. So this is what I want you to understand. So I don't have time to go through the swing of the market and the trend of the market, but there is a training on the BYOB Challenge YouTube channel, which was just done recently to help you understand, like this was a 9 pip reaction time. So go back to that training and you'll understand why the swing of the market and the trend of the market is important. So you on this call, and then if you go back and you actually go watch that call, and you'll understand how this, plays together, because this is what we call our pip reaction time. So this is where you saw a valid trade, right? Time frame confluence and everything was there, and we'll walk through what the BYOB cash out is, because this was actually someone's trade. And then this is where the take profit should have been, and I moved it forward to the side because it was the pipette, so I was just doing an example. And so this was actually the take profit. So they actually cashed out. This should have been a cash out at 10 pips, right? So because they counted their 10 pips. But the first number, if you go back and you look at that, where that trade was entered. So when you have that trade, when you enter the trade, and you look at the number to your left when you enter that trade, that is actually, that number is actually, that first number is actually where you entered the trade. The second number is actually where the market is at the time. Because there are two numbers. You got, the first number is where you got in, the second number is where the trade is actually at right now. So that's kind of what I wanted to make sure you understood. So because when you do your 10 pips are from where you entered the market. So I'm not going to tell you here, hey, this is your take profit. Now, I could technically do that, but what happens when we're not on at 5 and at 9? What happens when I'm out and I have other things to do, and you want to take a trade? So how do you build your generational wealth if I'm out, So this is how you know how to take your take profit. So where you get in, exactly, on the trades in the morning, we look at it and I'm like, hey, GBP is ready. You can take this for a sale. So if you take it for a sale, then you enter market execution, and then you look at your number and you grab your 10 pips, and then everybody's dropping 777. They got their 10. And then some individuals, because they were able to look at this and mark it up, right? They're able to look at this and say, because they've done their training on support and resistance, because they've advanced a little bit, because everybody's at a different level, which is okay. They look at this and understand that they get pulled back and they're not spazzing out, because they understand that at a support and resistance line, you get pulled back and then it'll continue to come back down. That instead of doing 10 pips, that this went down, they got their, they got 19, it pulled back up to about 9 or 10, and they were okay because they understood that, and then it comes back down till about 38. So they walked away with almost 40 pips, right? That's what they were able to walk away with. So when you understand, so that's why I tell you support and resistance is your lifeline. It is your lifeline. So when you understand what the market is and where it's at, because that was a drop, I can go to my higher time frames, right? I can go to my higher time frames and I can actually see what the market is actually doing. Oh, that was in the sale. That's in the sale. Oh, I can sell that down. And if you really want to get into market structure, which I got a few minutes, so let me, come on, don't freeze up on me. What does that look like it's forming? Anybody who understands market structure, what does that look like it's forming? One more person. Close. There we go. That's what I'm looking for. So, right? And I moved it a little bit or something, but ta-da, that's what it's forming. So where does that happen? Where does that happen? That's a reversal pattern. So what do we have happening in the market right now? That's a trend. That's a reversal pattern. So what is that gearing up for? Yep, exactly. So exactly. So that's what it look like it's gearing up for. So it's gonna finish and then it's gonna come back down. So, but let me kind of walk you guys through real quick. BYOB cash out, because we got about a few minutes to get. It's coming up. So it's making that right shoulder right now. You see that it's making the right shoulder right now. You see So for those of you all who like the longer term trade, you see that stochastic coming up and it's starting to get its curve. You see, what's my 4 hour doing? You see my 4 hour is kind of like hesitant in that little cell. So what's my daily doing? My daily hasn't even curved yet. So what's my daily doing? My daily look like it's gearing up too, right? It's at the top of the stochastic starting to get its curve together. And I got a pullback right here on this last candle. So this one just formed. It hadn't formed earlier. So yeah, that's advanced. Yes, and with practice, you will notice these patterns. You sure will. But for those of you all who want to understand how to BYOB cash out, why is this taking so long? Let's go here. So, right, let's talk about this real quick. I got a blue line, red line cross over the top, blue line, red, blue line cross over the red around the 80 in a downward momentum. Blue line cross over the red in a downward momentum. You guys notice I'm on a 15-minute chart. I have a red candle with a flat top, PSR on the top. When you have all of these things that line up, this is where you have the BYOB cash out in its simplicity. Understand that the stochastic must come first. So no matter where you get a trade from, I can get it from here. I can get it from swipe trades. I can get it from a SIG. I don't care where you get it from. Plug it in here. Understand, drop it in here. Click here, drop it. I don't care. Check verify on the BYOB cash out. Take your stochastic. The stochastic is a leading indicator. That means you want to check that first. So that blue line, this crossover is very, very important. Then for a buy, right? For a buy, I'm looking for that blue line to cross over the red and an upward momentum and an upward momentum. So, and an upward momentum. So, and then I need a green candle with a flat bottom, and then I need a PSR flip. Notice how this didn't happen till way up here, okay? Way up here. So what we're gonna do for the sake of time is we're only gonna look at this cell. So now I had this red, I had the blue line cross over the red in a downward momentum. I got a red candle with a flat top, and I got a PSR flip. What I really want you all who are brand new to the call to understand is that these Hikinashi candles are interpretive candles to the Japanese candles. You notice like these are Japanese candles. You see the difference in the candles? So this is how you read Japanese candles. They're not that smooth. They're not that pretty looking, right? So they're just not. So you have to try to, that's why you have to wait 2 or 3 candles, different things. So no, I need my Hikinashi candles. They're nice and smooth. Just nice and smooth candles, right? Just nice and smooth. So what my Hikinashi candles tell me is they tell me when I can enter a trade. I get that PSR flip. Both of these are lagging indicators. Now, this is what I know. I know for a fact that I have my candles set up. I have my BYOB cash out set up. Now I want to do time frame confluence. I drop down to the 5-minute chart. Drop down to the 5-minute chart, and I lost it. Drop down to the 5-minute chart. When I drop down to the 5-minute chart, it needs to still be selling, right? It has to still be selling. And you see, it is actually selling. It needs to be still selling. And then I want to go to the hour chart. The hour helps me understand the swing of the market. Somewhere in here is going to switch over. And it helps me understand the swing of the market. When that happens, okay, you notice that this was a doji candle, okay? Anything else, I'd be looking at it kind of sideways, trying to figure out what's going on. This is a GBP pair. GBP is the only exception to the rule. GBP is the only exception to the rule for the hour candle. I'm going to drop down to my 30-minute candle and see what's going on with GBP. Why is GBP the only exception to the rule? Because of the amount of liquidity in the GBP pair, right? I can run my candle. I can run my rule over this. I got 33 pips just in that candle right there alone. That's why GBP is the exception to the rule. I know I can get my 10 pips cashed out and go home. So you notice that GBP, so it's in a sell. So that is actually the BYOB cash out with time frame confluence. So I hope you guys got something from that. If I know I kind of rushed through the BYOB cash out at the end at 5 o'clock in the morning, of course, we'll be going through it in its totality. definitely be going through it in its totality. Hopefully, you know, you guys will definitely understand that. So what I want to do is, and if you need more clarity between now and then, the playlist, you're so welcome. BYOB Cash Out is there for you. One other thing, I'm so excited. I'm so excited because, you know, I'm so excited because the visionary behind the BYOB movement, Mr. Gerald D. Rogers, is actually in my home city and state right now. He is in Baton Rouge, Louisiana, and out there in Baton Rouge. In Baton Rouge right now. And so for our weekly meetings, our weekly meetups that we have, our weekly meetups, if you are in the area, you are in the Baton Rouge area, you definitely want to make sure that you show up. Yes, we'll go, make sure you go. So you definitely want to make sure that you are there, because he is definitely going to be right there at Panera Bread for that weekly meetup. So Mr. Rogers is definitely in the building, in the space, in the place. So, yep, and the red stick. What you know about that? So, definitely, definitely, definitely. So you definitely want to make sure you go there. So, with that being said, ladies and gentlemen, the question I got, the last question I'm answering. Yes, I prefer this site that we've been on this evening instead of the one in IM.Center. I guess I've been trading on it for 2 years. So old habits die hard, you know, creature of habit. So